It is the first full day of trading for two market newcomers, Zoom and Pinterest, both performing well after their listing on respective exchanges, perhaps too well. We're going to talk about that as well. Joining us right now is Cameron Ansari. He's Greycroft's principal and venture partner. Cameron was the head of corporate development at Pinterest until 2017, as a shareholder in the company as well, we should note. And also, Rhett Wallace is here, CEO of Triton Research. Viewers may recall that he made a bullish call on the program for both Zoom and Pinterest last week. So Zoom zoomed, like 80% zoomed. You also had a zoom, if you will, for Pinterest. I thought it was actually somewhat of a terrible mispricing.
And then Zoom increased their range before they went over the range before they zoomed.
I thought, but you know, for those who were clapping and thought this was some kind of great success, I looked at this and thought this was disgraceful.
Why? Just because it's
because
so
if I was Morgan Stanley and I was the banker who was underwriting for Zoom, and the stock zooms 80% on day one,
you mispriced it.
You mispriced it. There's no other way to look at this. I would even go so far as to say Pinterest up 30%. You know, I think you would like in a perfect world a 10%. 15% bump, maybe 20. I'd take 20.
Do you think that the Lyft pricing was perfect because it maximized the money raised for Lyft?
It becomes
right.
It becomes a very
I mean,
well. But
Lyft
had its own issues. But I'm curious, as a shareholder, did you look at this and say fabulous?
You know, I think for all the concern that came out before that they were pricing it too low, it was going to be before the last private round. People were, thought there was going to be, unicorn tears in the streets. Right. That it was going to be a disaster. I think they priced it relatively conservatively, and then they got more demand, and they kind of upped it.
Pinterest?
On Pinterest, yeah,
Pinterest.
They upped it sort of slightly.
Right.
And even that morning I was there at the exchange, you saw it going up like $1, $1.
Mispriced or not?
I think it was probably appropriately priced at the end, and then 20-30% bump is a nice thing to have, give it momentum to the stock.
And you think 80% is appropriate?
I think you live in the world you're in, right? And they both were coming right after Lyft, and it was such a disaster that they were required, if they wanted the deal to be successful, well, to be smart.
Right.
And so the other thing that's true is everyone in the world had heard of Pinterest, and not so many people had heard of Zoom. And the more people learned, the more they liked it. Right. And so it's not so much that they mispriced it at the moment. It's just that because of who they sell to and because of the nature of the company, people didn't know it as well as they knew Pinterest.
By the way, not only did they not know it, they didn't know it enough that some people were buying into this other company, Zoom Technologies, which went up for no reason. It was like on the pink sheets, right. It's going up a bajillion percent.
ZOOM versus ZM.
But I look on the pricing thing, and I was looking, obviously, always care about who the underwriters are. Morgan Stanley's also underwriting Uber. There's a huge incentive for these underwriters to make sure, especially after Lyft, to make sure that the market is actually going to look good, because guess what? The mother of all IPOs is coming in Uber. That's where the fees are. That's the big game. All of this is a sideshow if you're an underwriter relative to that one.
The flip side of that, I think, is that Uber is so big that if it goes wrong, it could close the whole window and stop all the ones that are coming behind from coming for 6 months or so, if they really get it Facebook wrong.
So you look at the Pinterest deal at 30% up. You're happy with that, generally speaking. They only sold a small part of the company, so actually long term, it actually could be helpful for them.
Yeah, look,
but how much cash did they leave on the table?
I mean, they raised about $1.5 billion, so maybe you could have raised, I don't know, 1.8 or something, or 1.9. But one of the things that's interesting is these stocks have only traded for about 4 hours or something. I mean, Pinterest didn't open until like 11:30, almost noon.
Okay, so let's talk about where these things go next, because part of the issue with Lyft was the immediate short interest that emerged. What do you think is going to happen here with both Zoom and Pinterest?
I think our sense was that Lyft was really weak right from the beginning, and you didn't need catalysts to feel like this makes no sense. These guys, I think, priced well. The charts for the day held right in there, and I think they still hold in while people wait to see, like, okay, now they can announce earnings, now we can have coverage, and, it could run to the lockups before things get crazy.
What was the lesson on day one of Lyft, though? Because Lyft, went up, creeped down a little bit, but it wasn't.
But Lyft made no sense at 72, much less 87. Right?
Does Zoom
and that's the difference between these things. Pinterest is priced very well, multiple-wise, relative to its peers. And so it's something that investors could look at it and say, like, okay, I can ground into a value.
Of this group, Pinterest seems to be the one that is on a price multiple seems actually conservatively valued.
Well, it's easier to feel like, okay, I feel comfortable in the context of Pinterest.
But do you feel comfortable with Zoom? Yeah, do you feel comfortable with Zoom?
Fully priced.
Fully priced.
I mean, it's $300 and something million of revenue that's worth, what, $15 or $16 billion right now.
Yeah, I mean, I look at the comps for Zoom. Even, you look at like HubSpot or Zendesk, Atlassian, Twilio. I mean, Zendesk and HubSpot are trading at like 10 to 14 times.
Right.
Atlassian and Twilio are about 20 to 22 times. I think where it closed on Thursday is like 25 times.
DocuSign's a very good comp, and we're like, okay, people are going to pay a lot more for this than DocuSign. Now, it's profitable, so that's something,
yes,
right? But it's a big premium over the comps.
For Pinterest, is there concern that Facebook's big push to monetize Instagram and now Instagram with the buy buttons that could be a Pinterest killer?
That was the number one concern I think people brought up over the last several weeks because they believe that happened to Snapchat, where Instagram released similar functionality and Snapchat has gotten hurt. We'll see. I mean, Instagram is a formidable, massive competitor.
Right.
But I think the use case in Instagram is fundamentally different than what people do on Pinterest. So it's going to have to really shift the way people use Instagram to do shopping and saving.
On this, wouldn't you say the user base is really hanging in there on Pinterest and the issue is monetization? That, the sales force at Pinterest is obviously doing an increasingly good job of monetizing the user base, right? Instagram is a threat to the user base, but less so to the monetization. As long as they hold the user base and monetize better, you keep getting that growth.
How much of all of this is just market sentiment that is lifting all of these things right now? And if that turns, it goes away like that. We can talk about the differences of each one of these stocks, but I get the feeling that all of these IPOs have been boosted by this positive sentiment and this whole idea that this is a hot commodity right now. What happens if that turns?
I think one of the things that, while that is inarguably true, one of the things that helped Zoom is that they actually have earnings per share at this point. So you start to move into the land of hard metrics where you can look at it on some sort of rational basis.
And a lot of them don't have great metrics if you start to look at them on an individualized basis.
Losing $1 billion of EBITDA and $2 billion of revenue means if you don't have sentiment, you have no business being anywhere near the public market.
But, I mean, the other question is, what price are you paying for growth? And where are you going to see growth elsewhere? So I think what's interesting right now is if you look at cyclical companies that are trading at much lower valuations, you're actually potentially going to see a bigger earnings surge from cyclicals than you are from these sort of secular growth stocks. And I think that's the other question is we've been in a market that's had lackluster growth. But if we actually see the cycle turn, that could be the biggest risk for the IPO market today.
I think this is another reason that Zoom did as well as it did, is even though they have earnings per share, usually you're trading growth for profitability.
Right.
Zoom had both. Right. Still growing 120% a year.
How big do you think, how much appetite do you think there's going to be left for the IPOs that are still coming? Uber, of course, being the biggest, but you put them all together, 2019 could be $700 billion of market cap. When does the window close? Is there a window on that $700 billion?
I think it depends on the sector. I mean, when I look at healthcare, this is the one sector where supply is actually outstripping demand. There's been more IPOs within healthcare than any other sector. They're flooding the market, and that's not necessarily the best environment for appetite. But I think within tech, you're still at a relatively light level.
Well,
of
we've
IPOs.
seen this before when the big ones come, like Alibaba did. Sometimes it just blows out the lights.
Yeah.
That people are full and they need to push back from the table and wait before they see what they want to sell out of to create new capacity to buy new IPOs.
At $700 billion, it's still less than one, Amazon or what. So there's a lot of.
Right.
There's some room to move.